President Trump from day one has been very focused on the economy.
Yes.
And absolutely convinced that we can get back to sustained economic growth of 3% GDP or higher. And the tax plan is center stage of his economic plan. So this is all about middle-income tax cuts, cutting business taxes, and making U.S. business competitive with the rest of the world.
All right. That was Treasury Secretary Steven Mnuchin last night on Tucker Carlson. Among the key members of the administration not with President Trump in South Korea today, both Mnuchin and Chief Economic Advisor Gary Cohn were left behind to help push forward tax reform, which has now entered its second day of discussion on Capitol Hill, the so-called markup. Joining us now, First Trust Chief Economist Brian Wesbury. And Brian, it's good to see you. Thanks so much for joining us.
Maria, it's great to be with you.
You say you're not so particularly enthused about the proposed plan right now.
Well, no, okay. So
and specifically the way it treats individuals.
Exactly.
So
there's two pieces. I'm very enthusiastic about the corporate side. We all know 35% top tax rate in the U.S., highest developed tax rate in the world. We have to cut that, so that's fabulous. What I'm not enthused about is how Republicans are trying to fit everything into all these rules that we've created. You know, the Congressional Budget Office, the Joint Committee on Taxation. They have all these rules about how they score things, and we never get the benefits from growth. And so as a result, they didn't do a true Reagan supply-side tax cut, which is cutting the marginal tax rate for individuals, especially at the high end, and they didn't do it.
That's absolutely right. And what I've been saying over and over again is that the top 10% of earners pay 70% of the tax. So if you're going to have a tax cut plan, you should cut taxes on the people who pay the tax. But the Wall Street Journal has called this a stealth tax, this 45.6% rate, which is going to hit incomes of $1 million, 1.2 to 1.6 on couples. Right.
So what happens is because they've raised the standard deduction and people at the low end pay less, everybody does, right? Because if you make $1 million, you still have to go through those early stages. And what they do is they claw it back. And so if once you make a certain amount of money, they start raising your rate above the 39.6 to get it back. So your average tax rate goes up.
That's exactly right.
What Reagan taught us is it's that top marginal tax rate where incentives are created, and they're raising it.
You would think so. Jagan, what do you think about this? Because the 45.6% rate is obviously now a top rate. Here's what the administration or the House will push back and say. The only purpose of that rate, which is really a calibrated 6% surtax on incomes exceeding $1.2 million for married couples, $1 million for everyone else, is to deny high-income taxpayers the benefit of a 12% bracket. They just don't want the high end to have any exposure to the 12% bracket.
May I translate? They are raising they're raising rates on higher earning Americans, and they're trying to do it in a very sneaky way that it won't get reported on. But
the Journal caught it, and so did we.
There are a few things that the Republicans have done. They have given in to the class warfare language of the left. They have not simplified the tax code. This is not tax reform. They are complicating the individual side for many Americans. And they are raising rates on the people who actually spend the money, who pay most of the taxes. And when you factor in the 3.8% Obamacare surcharge, which the Republicans did not get rid of because they failed to repeal even part of Obamacare, you're talking about a top rate of close to 50%, 49.4%. And if the Republicans do that, it's only going higher when the Democrats eventually take over the House.
Well, that's the point. It all of a sudden becomes the new bottom for the high end. So if Nancy Pelosi comes back into office, she's going to say, 45.6% for the high earners.
And think about Nancy Pelosi. In California, the top marginal rate is going to be over 60% because you can't deduct state and local taxes under this new plan, too. So marginal rates are actually going up. It's the opposite of a Reagan. The only reason they're doing all of this is the way that it scores. All right. So we have all these budget rules. What I find fascinating is we have all these budget rules which are supposed to protect the American taxpayer, right? And yet here we are in the 8th year of recovery, and we have a $650 billion deficit. So obviously their models don't work.
Well, that's the problem. The deficits, the persistent deficits. That's why they can't pass it.
Right. Exactly.
To be fair, they got approval for $1.5 trillion tax cut plan. That's what's in the budget, and that's the confines of what they have to do. And when the robbers want to rob a bank, they go to a bank. Why? Because that's where the money is, and they're going to the high end because that's where the money is. I mean, let's face it.
That $1.5 trillion is trying to fit in these rules because they want to be able to do it with 51 votes instead of 60. It's all the rules. So these rules are designed to keep us from running deficits, and yet we have permanent deficit. So obviously the rules don't work. I wish our Congress would scrap all these committees that do all this scoring because they don't know what they're doing. They literally don't know what they're doing. The math doesn't work.
There are enough Republicans who are chafing at this that they might not vote for it. The Republicans can only lose 22 votes in the House.
That's right.
Right.